Hey guys and girls, hope everyone's doing well and welcome to this video where what I'm going to do is actually just show you guys one of the trades that I placed yesterday. You can just have a look here in the MT4 account just to prove for any haters out there. This is Traders Group Global Live server. Okay, it is also a funded account from my Forex funds. And as you can also see here as well, here is my name, Matthew Nichols. Here is my certificate. I did share this for you guys on Instagram recently as well. And as you can see, it's a 20K funded account and days since first trade is 4 days. Now that does include 2 days over the weekend as well. Okay, that does include 2 days over the weekend. So this account was past stage 2 on Friday last week, and I actually placed a few trades on Friday, which was really nice with about 300 profit. And then yesterday I managed to catch a couple of good trades, which pushed it up to $600 profit, okay, in about 1.5 days, which is really nice. So what I want to do is actually just show you the gold trade, why I took it, etc., etc. Those of you that have followed us on Instagram will be aware of the reasoning why I did this $20,000 account. Okay, someone on Instagram, as they all do, decided to bet me that I couldn't even pass a challenge. Okay, and what I did was I actually began that challenge on 2 weeks ago. Okay, stage 1 was passed in 2 days. I then had to wait for 3 days to go by, as it has to be 5 trading days. I then got stage 2, which was also passed in 3 days. Okay, and then I waited until Friday, which was my 5th day, before then being given the $20,000 funded account. Okay, so everything I do in terms of the way that I trade is taught directly to our members at the trading field. Okay, that's very important to understand. I don't keep any secrets to myself. My members will tell you that as well. I'm very open and transparent when I'm looking at positions, if I lose positions, if I win positions. And I show you all of the things that I do personally and my business partner Yasser does personally when we are placing trades. Okay, so really important to understand that I don't do anything different than what I teach my members to do. Okay, so let's just jump into the trades. Obviously, returns so far really good. Made a 2% gain in the space of 1.5 days so far. So hopefully that continues. And in terms of the trade that I took yesterday, it was a gold long position. Okay, a gold long position, and that gold long position was executed. If I just jump into the MT4 account, you'll see where the entry was at 1815.7. Okay, and that was 9:30. Now I just need to double check the timing, okay, because right now we are currently sitting at 8:15 and it's currently 9:15 candle. Okay, so that means I am an hour ahead right now. So if I go back to the chart here, it means that if the position was taken at 9:30, it was actually taken at 10:30. And as you can see, 1815 at 10:30 was right here. Okay, 1815.7. So let's just put that on first of all. So 1815.7 is roughly speaking, I've got the magnet on, but roughly speaking at this level here, entered on this candle here. Okay, stop loss for this trade was 20 pips. Okay, 20 pip stop loss. Now, why was it a 20 pip stop loss? First of all, I think that's what's important to know. And the reasoning behind that, let me just get rid of all this stuff, is that we had created a nice little new high. We had also broken the high back here as well. And then we came back to grab the liquidity from this region before shooting up. Now, the main question is, why did we shoot up so strongly? Okay, and the reason why I was very happy to take this trade with such a tight stop loss and expect that breakout to the upside. Now, the main reason for this was due to the US dollar. Okay, so US dollar DXY is a chart that everyone should be focusing on and looking at throughout the week. Now, DXY, okay, overall is bullish. Okay, if we go into the weekly time frame, if we go into the daily time frame, whatever time frame you go on, this market is overall bullish. So you need to be very careful when you are shorting it. It doesn't mean that you can't short it, but you need to see the right opportunities. You need to trade with downside momentum if you're going to go against that trend. Okay, now I had this area marked out for my members. Okay, and we actually placed a position long of Euro USD, which we actually closed in a slight loss. And we actually also had a gold short that was also in play, which we closed at ever so slight profit, about 0.25 risk reward, something like that, because DXY was not playing ball. Okay, and if we go down onto the 15-minute time frame, what we can see is the market was giving us some very, very clear signs here that actually we may break this level. Now, those of you in our groups will already know what Monday usually brings in terms of Forex markets and trading. Okay, there's a very specific kind of set of rules that these markets follow, especially when it comes to Monday and Tuesday. So after executing Euro USD and gold trades, okay, and coming out of those, what I actually understood here was that we were about to break this low. I didn't want to act on this until that low was broken. Okay, and as I mentioned to you, it was 9:30 that I entered that position. 10:30 my time, 9:30 on MT4. So once this low had been broken and that momentum was coming through, obviously I looked at certain USD pairs and they had already pushed up quite strongly. So what I'm looking for is something that hasn't quite caught up with what the USD is doing. Now, that for me, that market was gold. Okay, and what gold did is gold actually hadn't gone up. If we look at the timing here, on, for example, the break, okay, so DXY. So the DXY break and momentum occurred, okay, began to occur at 9:15, and by half past 10, okay, then had that big push to the downside. Okay, so the first beginning part of that downside move was 22.15. Okay, and at 22.15 here, we had not pushed higher. Okay, we had not pushed higher. Now, half past 10, okay, half past 10, what we can see here is we actually had that bullish momentum come out of an important region. We also had at this point, by the end of this candle, DXY had already dropped a considerable amount of pips. Okay, so what I was expecting is actually to just get that slight delay and actually have gold push up really, really nicely, which is exactly what it did. Okay, so the main analysis and reasoning behind placing this trade was actually comparing other markets and identifying an opportunity where the gold market had not yet caught up with the DXY move. Okay, had not yet caught up with the DXY move. And after this had happened, okay, at half past 10, I had a perfect opportunity, okay, a perfect opportunity to catch the next move pushing up into this high. Now, when it comes to trade management, I'm not the same as everybody else, okay? What I do is I stick by a very, very important principle that a lot of people should understand and that is that the market owes you nothing. Okay, there is no reason why the market is going to give you the absolute best amount of pips possible. There is no reason why things can't change fundamentally and this gold market could flip and reverse in the other direction. There is no reason why the market owes you anything. Okay, and that's really, really crucial to understand. Okay, once you understand aspects like liquidity and where the market is reaching for and what the market is heading towards, then what you can do is you can begin to scale out of your position to ensure that just in case the worst case scenario happens, you are still in a very, very favorable position. Okay, really important to understand that. So with gold, okay, if we go on to my history here on MT4, what you can see is a lot of little positions taken off. Okay, so if we just go to my entry, where's my entry? So we've got here 1815.7. So I actually entered two positions, 0.5 lots each, I believe. So one lot position on gold, which was about a $200 risk in total. Now, when we look at the positions that I've taken off, we can see here that I scaled out quite quickly. Yeah, we can see that I scaled out quite quickly. So for my first bits of profits, okay, that I took were around 1818 and 1821. Okay, so as soon as we had that push up into this 1820 level, what I'm doing is I'm looking left and I'm saying, right, okay, let's just be safe here. Last thing we want to do is get to this level, have $300 on the table, and then see it reverse and come back to break even. Okay, so I moved my stops to break even and I took out partial profits. Okay, I took out half of my position as soon as we got to 1820. Okay, which was about 50 pips or so. Now, once that had happened and we continued pushing up, I continue to scale profits out of the position. Okay, I continue to scale profits out of the position. So we can see here that I took profits from 1816, 1817, 1820, 1819, 1822, and finally 1822.4 was the highest point. And that banks there about $300 or so, okay, which is a great growth on my $20,000 account. Great for what was approximately 30 minutes worth of movement, and very, very happy to end the day with what was $300 added onto this funded account. So, again, key lessons to learn from this. Number one, cross check markets. Okay, if you're looking at the dollar and you're looking to, for example, long the dollar, short the dollar, whatever it might be, make sure the currency that you're looking at pairing it with suits that position. For example, if you're looking at going short of Euro USD, okay, make sure that you believe that Euro is currently bearish. If Euro is currently bullish, then it's not necessarily the market to be shorting. You might find that if you look at something like GBP USD or NZD USD, that they provide more favorable positions because the other market that you're pairing USD with is currently bearish, okay, as opposed to being bullish. So that's number one. Number two is understand that the market owes you absolutely nothing. If you're in a position and you get that entry right and you get a nice push in your direction, do not be greedy, okay? Do not be greedy. If you are greedy in this market, the market will eat you up over and over and over and over again, okay? Most people will blow their account very, very quickly because they fail to understand the concept and the importance of taking profits, letting your runners run, cutting your losses short, and also moving things to break even to protect yourself in case things turn around. Okay, just because you've done your analysis and you believe the market is going to go to a certain level doesn't mean it's going to go to that point. Okay, so as you are approaching that point and as you are hitting areas of liquidity, please make sure that you take profits off the table. Okay, it is far better to come out of the market with $200. Okay, as opposed to coming out of the market being $300, $400, $500 in profit to then see all of that disappeared and back down to zero when you hit your break-even stop. Okay, the most I could have made on this trade could have been about $700. Okay, $600 potentially, but I'm more than happy with the growth that I had in my account of $300. So really important to understand that as well, guys. So I hope you find that video useful. I haven't gone into the intricate details as to exactly why I placed the trade where I did, because that kind of stuff is reserved for our course members. But if you are interested in learning how we trade and learning how to view the markets in a highly, highly probable and really profitable way, then check us out. Any questions you've got, we're always more than happy to help. And if there's anything I can do to assist you on your trading journey, then please get in touch. Cheers, guys.